Let's welcome in Ajay Srivastava, Managing Director at Dimensions Consulting. Ajay, good morning and welcome to the show. The kind of route that we've already seen, specifically with regards to where the broader markets go, the corrections that have come in, do you think it's the end of this route and probably there is some green light that could be emerging from here on?
Good morning. I think, the answer is, to your answer is, I think we are in oversold territory at this point of time. Having said that, I think we need to be cognizant of the fact that a lot of companies did not give results in line with the expectations. So how they do the work for the next quarter is going to be very important for us. And the fact remains that this time around, as the March ending comes in the next 45 days, there will be a lot of rebalancing on the side of tax as well, liabilities. People who book profits may want to sell out the shares with their losses to balance their tax, etc. So it's going to be volatile the next 45 days. Definitely is going to be. But I think definitely on the side that selling is kind of abating, at least in a small and mid cap was a local selling. It's not, you can't say FIs were selling mid caps and small caps. That's not true. So there was serious profit booking happening in the system. Having said that, if I were sitting on a portfolio, would I sell now? The answer is broadly no, unless something really bad happens to your company. Would I buy seriously? The answer is perhaps again no, because that's it. 45 days volatility, RBI out of ammunition, Trump where he is today. I think this is going to be a time where you wait patiently for times to come and you buy. But I think market bottom, perhaps for the short term, definitely yes. So you don't need to sell if you're really worried about, in our view, about that more damage can happen to your portfolio.
Ajay, good morning, or should I say the globe-trotting Ajay Srivastava with us finally after repeated requests.
No, I just tell you something which I want to repeat to all my viewers is, it's a very good idea to keep in cashing your money and using it for the things that you like to do in your life. Believe me. Yeah. And today when we are a lot poorer, we will remember that, oh my God, look at our profits in October.
Okay, fair call. So you use the money wisely, I must say. Okay, great, Ajay. But good to know that you are saying that this is not the time to sell, even if this may not be the time to buy. Now, and I agree completely, Ajay. So my question to you is, what would it take for you to become constructive again? Would it have to be corporate results and commentary following, or would you preempt that via some lead indicators, political actions, data, or otherwise?
See, you summarized very well 4 points of decision making, and I think very clearly the reason we are not buying seriously at this stage is because I think the RBI has run out of ammunition. If you see what's happening in their market at the point in time, look at the financial market, look at interest rates. It just all went awry. Political signaling costed the country very heavily because the interest rate went wasted. You have one bullet or one interest rate. You need to make it happen. You need to make it the mark. You just wasted the bullet. Now the is gone. Interest reduction is gone. There's nothing to show for it. There's nothing you can do about it. And US very clearly last night, if you heard the Powell testimony, said, we are in a hurry to reduce interest rates. You have brought the country's interest rate perilously narrow the margin to US interest rate, and we are all paying the price for it in terms of the push for FIs to get out of Indian debt at this point of time. Forget equity. Debt was also could have compensated. If you run contrary to the global policies, I think you will pay the price, and we are paying the price. Not that the rupee got stabilized, but we lost all the traction, we lost all the FI debt. So, one of the reasons is, could RBI change track? Could RBI become more independent of its assessment in tune with the US Fed policy? That could bring you back to the table because that makes people comfortable to put money in a country. Until FI buying doesn't come back, our buying lot will not improve because retail has done its bit, SIPs have done it, MF have done it at the bit now. You will see in the next 12 months more profit booking happening as market moves up. And that will be the challenge for the market, that every time it moves up 10% odd, you will see huge amount of selling as people will sell. So critically speaking, we need to get FIs back if the game in the stock market needs to go back. Otherwise, just on domestic legs, I think we have done with what we could do. And that's where the political action, PSU divestment is off the agenda, your budget is gone, tax cut has already been absorbed by the market with no difference. That's why I said the ammunition you had has been now wasted and gone. So I'm not sure, unless there is some what's happening in America. Unless you change the dynamics of the country, you talk away and say become merit oriented,
Ajay,
focus on privatizing PSUs. Nothing going to happen to the
yeah.
economy to make you buy.
Ajay, I have a question, Ajay. I mean, 25 basis points at the margin wouldn't make the foreign institutional investor come back any which is, right? So my question to you is this. So I take your point. I take on board your point. My question is this, though. What causes the FI to come back, right? Is it an EM dedicated sell-off which India is a casualty of as well? And will FIs come back with the reportage of earnings, or will it be a policy decision that will make FIs come back?
Yeah, I think it's going to be I don't know whether will come first, the horse or the cart, but I guess it's going to be a combination to say I have comfort in the policy making that it is in tune with what's happening globally. It's just not dictated by local political, requirements of headlining. I think that's the most important part out here. You got to be in sync with US Fed. If US Fed is saying that I cannot reduce my interest rates anymore, at least that's what the testimony was, given the inflation rate in the US, and your margin is narrowed down to less than 2%. Where is the room to get interested down? You have a very negatively hawkish RBI monetary policy committee at this point of time, bent on reducing interest rates. Now, if you were looking from outside, you would say, hello, America is not reducing, your policy committee is bent on reducing. So signaling is equally important. And if that doesn't happen, today what's happening? Banks don't have money, demand is what it is, it. So what does trigger it off at the end of the day? Someone needs to put money in the system for the system to go to the next level energy. How do you shift gears? The gears will be shifted by the FI buying at this point of time. And they need to see both apart from the results. Results partly is better off because your now P ratios are so much more lower that your comfort that things may improve is much higher for any investor at this point of time. But the fiscal and the monetary signaling is going to strengthen and says, okay, guys, we are on the right track. Results will catch up eventually. Ps are down. Time to go buy in. And that time to go buy in is going to change the fortune of this market from outside this country, not domestically.
Ajay, one question I have with regards to FIs coming back is, barring IT, FIs still are much more engaged with regards to the consumption story right now in India, right? Now, for them to come back, how important is it for the global sentiment to improve? Because clearly they're trading micro as opposed to the global macro so far. So how would you respond to that?
What is global? Global is America. Global is Japan. That's it. Two countries and a little bit of China at this point of time, but China's story is not the flavor of the day. Global is America. Europe is retired and gone out of the systems. Nobody talks of Europe. Nobody invests in Europe. Nobody thinks of Europe. So really, that's why I said you need to be in sync with what's happening in the US. And when you said US market, if you saw the inflation data in the US, the inflation is going up and not coming down. The unemployment rate is one of the lowest historical ever. So, macro-wise, you have a very strong US economy. The rest of the economies are weak. You have a weak Indian economy at this point of time, comparatively. So you got to bridge the gap. So I'm not convinced partly that we have a macro problem because America is life and humming at this point of time. The rest of the world is having a problem, but that's all about it. But so, Japan is doing reasonably okay. You saw what's happening in Japan. The interest rates are now back from zero at this point of time. Ignore Europe for time being. China, I think we've hit the bottom at this point of time, and they are formidable. I can tell you something. We talk of being a manufacturing powerhouse. People need to actually see what's happening in China to understand it's not going to be a cakewalk for India to be a powerhouse. What they're doing is amazing. So my guess is, again, back to the same point. It's not macro. It's the micro issues we need to tackle in India, become productive, focus on this, and get out of freebies. Look at where OROP, pensions, if you saw the Indian budget, there is no money left to invest. OROP charges, pension charges, salary of PSUs and employees of government put together, interest payment. What is discretionary left with the government of India? And I think that's where I said when I alluded to say, we need to do a Musk in India, we need to do a Trump in India. Cut the hell out of the flab of India, put the money back in the market, develop our cities well like what China has done, and privatize the PSUs. If that doesn't happen, short-term case of investment thesis is just at this point of time in a doldrum.
So Ajay, once you start looking at putting money into the market, once the rout is over, maybe 2 months, 2 quarters, whatever the timeline be, where will you start putting your money?
I think if you're already there, pharma is a safe bet with rupee dollar where it is. 50% of revenues come from, or 60% revenues come from America for most pharma companies. They will make quite a handful of gain at this point of time. And you can't replace a pharma medicine chain so easily. You can't replace a CDMO so easily. And at this point of time. So therefore, and also CDMOs in India, partly because they're sitting on huge capacities which they're not able to fill. So everybody's got capacities, everybody's done the investment. So I think pharma, CDMO sector should do well in the next 12 to 18 months at this point of time, definitely. I think hotels, aviation continues to do well at this point of time. The demand is good. There are no new suppliers. We saw telecom story is emerging as very beautifully. A telecom story is emerging out of there. I think at this point of time, the engineering exports to America is good. Engineering exports to Europe is in doldrum. All the companies are down at the bottom. They might recover a little bit. So if you were to do the hierarchy of things, stay with hotels, stay with aviation. Pharma is good at this point of time, and telecom is a wonderful story. And on and on, you get good quality companies in the what is called new age space. They gave you time to buy again. If you've not bought your portfolio, you can rebuild the portfolio with new age companies. But as I keep saying, 30 to 40, maybe 50% of your portfolio should be companies which have come of age in the last 3 to 5 years. That should be the mantra for the portfolio more than sectors. Go for the new hungry guys than the old fuddy duddies. And you saw what happened to all our FMCG consumers. They're dying by the hour.
Yeah, that is. Ajay, I'm tempted to ask this to you. Where within the, because small caps are suddenly the new hated lot in town. Not everything will be bad. Where within the small cap universe are you constructive, and why?
See, the small cap universe, I don't know. First of all, definition of small cap is also so wide. It's
That's
1,000
true.
crore, 500 crore. What is the small cap in this country? But let's assume that
Let's
you've
say,
got turnover of.
but no, beyond 250, Nifty 250, let's say. Let's stick to the definitions.
See, beyond Nifty 250, I think number one priority to us has been we're buying the hotel companies because they will be sold. And they've got tremendous value at this point of time. Hotels is number one in the below 250 category that we're seeing. Number two is consumer brands, because the new age consumer brands, that's what we are buying because they will be bought. You saw what Hindustan Liver did just now. Nestle is trying to do it. Everybody's trying to hustle into the nature's pack, and therefore all the brands which sit there in the space will have a very wide traction. That's the second lot of the companies which we think a great thing. The third lot of companies, in our view, is going to be the EPC companies, which will see a lot of traction at this point of time because the big guys are finding it challenging. The smaller ones are doing better. So I think in that space, this EPC could become the next big thing. So I would still go for, as I said, hotels is a priority one at this point of time. The consumer brands, priority two. The third is EPC, and the fourth would be the smaller pharma companies. Because beauty of pharma companies is you have a 500 crore company, it becomes beautiful to buy by all the PE funds and to add on. So they give you tremendous value in the end, even if not on the share price, on the buyout mode. So look at these four sectors, and I think you should be fine with it one. Local defense companies, which were flavor of the day, I think verdict is out how much orders will come from the government. So it's like another PSU. They'll get orders, they'll do fantastically well for the quarter. They don't get orders, they won't do well. And you saw what happened to the railway company, same story. Built up the hype, no orders, price collapse. So selectively, but I think there are decent cases of below 500 crore companies as well in the market. It's not zero ever.
Not zero ever. But, well, a very interesting conversation today, Ajay Srivastava. Many thanks for your time. I really appreciate it.
Thank you very much. Thank you very much, and you have a good day.
Yep, thank you. A very important point mentioned there, that amongst other things that you do, please don't forget to enjoy your money. I think it's important to do that as well.